Welcome, Frank. Can you give our viewers an update on the U.S. Global Jets ETF released in April of last year?
Well, it moves with the markets, and it's remained undervalued relative. If I look at PE ratios, cash flow multiples relative to the other sectors within the transport sector, that would be trucks and trains, and it's undervalued relative to the overall stock market. Every time the stock market surges, Jets also flies with it. It's corrected with the market, and it's really caught up with the sentiment of global economic activity.
Historically, airlines have struggled to operate profitably. In your opinion, has anything changed?
The big things that changed after 2007, you saw this in 2008, 9, but there's a rapid increase in those horrific bag charges and taking away your mileage points and just making it very difficult to get a free, inexpensive flight anywhere. All of those changes globally added $35 billion of free cash flow to the airline industry. And then we had the price of oil fall. So the windfall here is substantial. We were commenting that last year, the drop in oil prices was like a $500 billion global tax break, which is to fuel the economy. And the big beneficiaries of that are the airline industry. And that's why we're seeing record stock buybacks, and dividends increased almost 90% in the airlines industry last year.
Gold's gotten off to a great start in 2016. Do you think this is the beginning of a new bull run?
I do, and most people don't. What's really interesting is that the ETFs, the equity ETFs, in the first quarter had redemptions. The money was going into the bullion ETF, and approximately every $1 billion that goes into the GLD lifts the price of gold by $30 an ounce. But recently, in the month of April, we've seen net inflows into our gold funds and into the gold equity ETFs. That's positive. And what's driving this? Real interest rates. I've mentioned this before in your program. It's so important to follow, but it's easy to get fooled because nominal rates are zero everywhere. But real interest rates are, what will the government pay you for a 5-year government bond, take away the inflationary rate, which gets populated every month, and either they're paying you a positive rate of return or a negative rate of return. And anytime the rates are negative, gold goes up in that country's currency. A year ago in the U.S., we had positive real interest rates. Now the trend is going negative, like it was, if you recall, in 2011 when gold peaked at $1,900 in September of 2011. The negative interest rates were minus 3%. Now we're far from there, but the more they go negative, the higher the price of gold goes.
So what are some factors that you think will affect the gold price in 2016?
No, I think that that's really significant. And on the backdrop, our central banks continue to buy because countries are basically devaluing their country's currency. And we're seeing something else that's really interesting of central banks printing money and buying other real assets, like the Bank of Japan has bought 10% of their stock market. Switzerland has been buying the biggest market cap companies in their country. So they're not only countries buying gold, they're also buying the stock market. And this is unheard of in history.
Why do you prefer gold royalty companies over other gold-related investments?
Well, it's really simple for understand Newmont. Newmont has to pay a salary of about $300,000 of their revenue. If you do a gross revenue of the company divided by the number of employees, it works out to $300,000 per employee. Franco-Nevada, which has a royalty on Newmont's assets and Barrick's assets, is $15 million per employee. That's a nice, massive difference. And Goldman Sachs is just a little over $1 million of revenue per employee. So the profit margin is much greater for the royalty companies. And two is when we look at free cash flow yield, the free cash flow yield on the Franco-Nevadas, the Silver Wheatons, and the Royal Gold have all been substantially higher than the gold mining stocks.
And finally, do you have any standout companies that you like at this time?
You know, it's really interesting that Pierre Lassonde was sharing with me, who's the chairman of Franco-Nevada, that 6 of the 10 best performing mid-cap gold stocks last year on the Toronto Stock Exchange, they had royalties on them. And so some of those companies, ones that we love, that are important and have high grade. The Klondike has a huge 12 grams of gold, and the average mine in the world is 1 gram. It has a highest CAGR of free cash flow. It's one of those interesting mid-cap gold stocks that are listed in Toronto that we think could be taken out between $6 and $9 a share. So we like companies like that, and we've seen other companies that Franco-Nevada have had royalties on be bought out this year, like Lakeshore.
Thank you for taking the time for today's interview, Frank.
Happy investing.